Hi there. I hope you're keeping well. In this podcast, we will explore the main types of federal and provincial insurers. Just to be clear, our focus will be exclusively on insurers that both operate within the Canadian borders and that have been created under federal or provincial laws of Canada. Now, as you have read in Module 1, on page 11 of the background paper number 3, published by the McKay Task Force, it explains that the federal and provincial governments each have the power to create insurers. There are two broad categories of insurers in Canada, both at the federal level and the provincial level. And these two are, first, life insurers, and second, property and casualty insurers, which are sometimes, or usually in fact, referred to as P&C insurers for short. Now let's examine these insurers and their corporate structures, starting with private insurers. Private insurers, that is, insurers that are not government owned or operated, each have one of two corporate structures. So just to be clear, this is the case for both private life and private P&C insurers. So each of these types of insurers have one of two corporate structures. They either have a share-based structure. Sometimes these are referred to as stock companies, or they have a mutual structure. In the case of share-based insurers, the holders of these institutions' shares are the owners of the institution. Again, in the case of share-based institutions, who are the owners? Well, the owners are the holders of the shares issued by that insurer. At shareholders' meetings to elect the insurer's board of directors, a shareholder usually has as many votes as the shares they own. In other words, if the shareholder owns 100 shares, they generally have 100 votes. In the case of mutual institutions, the owners are either their policyholders or their members. In contrast to share-based institutions, at policyholders or members' meetings to elect the mutual insurer's board of directors, a policyholder or member usually has no more than one vote. Mutual insurers are to the insurance sector what credit unions are to the banking sector. In other words, mutual insurers would be the cooperative equivalent of credit unions. I invite you to watch the CAMIC video in this module, which provides more information about mutual insurers. In the broad category of private life insurers are life companies and fraternal benefit societies, or FRATs for short. Again, in the broad category of private life insurers, we find life companies and FRATs. In terms of insurance products, life companies and FRATs are licensed to offer very few products other than life and health insurers. Life companies and FRATs are also allowed to offer investment products. Now, this feature of being able to offer life insurance and to offer investment products is absent with respect to P&C insurers. We'll get to P&C insurers a bit later on. Unlike FRATs, individuals become customers of life insurance companies for the primary reason of obtaining financial products and services. Now, what's a FRAT? Well, Section 2 of the Federal Insurance Companies Act defines a frat as a body corporate without shares and that is formed for fraternal, benevolent, or religious purposes, including the provision of insurance benefits solely to its members or the spouses, common law partners, or children of its members. As the definition suggests, insurance services is only one of the services that a frat provides. And the services that a frat provides always comprise benevolent activities, such as providing community or recreational programs. In addition, subsection 23, sub 2 of the Federal Insurance Companies Act requires frats to be non-profit organizations. People generally join a frat to work together for the welfare of their members and their families, and who have a type of common bond, such as common religious beliefs, ethnicity, or a common vocation. People generally choose whether or not to purchase life insurance offered by a frat once they are a member of the frat. So overall, when you think about a frat, I would say think about an entity that provides services really around benevolence, such as providing community and recreational programs, and that rallies people with a common bond, and insurance, or life insurance to be more precise, that it offers is typically secondary to these other types of benevolent activities. Please watch the Thrive-In video in this module, which provides more information about frats. Now let's turn to the broad category of private P&C insurers. So this broad category includes effectively all types of insurance companies that provide insurance except life insurance. For example, P&C insurers offer auto insurance, they offer liability insurance, they offer residential insurance. Mortgage insurance, though, is a bit of an exception. It's true that a mortgage insurer is technically a P&C insurer, but regulators require that companies that wish to offer mortgage insurance to limit themselves to that type of insurance. And that's for policy reasons, given the unique elements of the insurance itself and its role, which we'll not discuss in this course. But given that providers of mortgage insurers can only provide mortgage insurance, we typically refer to these types of insurers as mortgage insurers, but technically they're within the category of P&C insurers. And in terms of composition, well, it's worth noting that the vast majority of private federal insurers are share-based institutions. And that's also the case at the provincial level. And this is in part given the financing flexibility that such a corporate structure affords these institutions in the form of raising money via the issuance of shares. Now let's turn to public insurers. Public insurers are either government-owned corporations or the government itself providing insurance. An example of a government-owned corporation that provides insurance is the Insurance Corporation of British Columbia, otherwise known as ICBC, which is mandated to provide universal compulsory auto insurance to drivers in British Columbia. An example of the government itself providing insurance is employment insurance, or EI for short. EI is a federal government program that provides temporary income support to unemployed workers or to workers who have taken time off due to certain life events, such as caring for a newborn child. Public insurers mainly or exclusively provide P&C insurance, such as auto, health, mortgage, and export credit insurance. So again, public insurers are typically provide P&C insurance. And subject to a few exceptions, the raison d'etre of public insurers is to provide insurance deemed essential to, and therefore mandatory for, the Canadian public. Again, generally speaking, and there are a few exceptions, but generally speaking, the raison d'etre of public insurers is to provide insurance considered essential and therefore mandatory for the Canadian public. And in line with this raison d'etre, public insurers generally have a monopoly in their respective market. So that concludes our discussion of public insurers. And so let's summarize what we discussed. So there are two broad categories of insurers: life and P&C insurers. And within each of these categories in the private sector are two types of corporate structures. These structures are the share-based structure and the mutual structure. Within each of these categories in the public sector are also two types of structure. We have government-owned corporations, and we have the government itself providing insurance. The two key differences between private and public insurers in terms of insurance coverage provided are the following. First, public insurers mainly or exclusively provide P&C insurance. And second, public insurers generally provide insurance deemed essential to the Canadian public. So again, the two key differences between private and public insurers in terms of coverage provided are the following. Public insurers mainly or exclusively provide P&C insurance. And second, public insurers generally provide insurance deemed essential to the Canadian public. This concludes our podcast. Bye for now.